What's up guys, Dr. Ryan here with another episode of Smashing Wealth. In this video, I'm going to be breaking down specific self-employment tax deductions that you could take full advantage of as a business owner today. I'm going to be going over multiple actionable business deductions in detail. You may be able to implement these write-offs for a small business on your next tax filing. I am even going to go through the tax calculation on each write-off and show you how you may be able to claim each self-employment tax deduction. This is going to allow you to dramatically reduce your overall financial liability on your tax return. You are going to learn different ways to avoid paying taxes legally, which you can then discuss with your CPA in order to determine if it fits your particular tax situation. Ultimately, this is going to result in increasing your profits, which you can then reinvest into your business to grow your cash flow even further. If you stick around to the middle of this video, I'm going to be sharing my biggest tax secret that I've personally used to maximize my tax savings coming up. When I first started my business, I had no idea what I can deduct, what records I needed to keep, or even what a deduction was. I have a disclaimer for you guys. I am not a CPA or a tax professional. I am simply a YouTuber. Nothing in this video should be misinterpreted as tax advice. This video is not financial advice. What you can do with your taxes changes based on your income, your tax bracket, your marital status, and where you live. You may not even qualify for some of the deductions that I will be discussing. Please consult a licensed CPA for your own specific tax situation before attempting to implement anything in this video. If you attempt to implement anything in this video without the approval of a licensed CPA, you would be doing so at your own risk. We do not assume any liability whatsoever for your actions, and by continuing to watch this video, you agree to these terms along with the terms of the full disclaimer in the description of the video below. This video is for entertainment purposes only. Now let's get into the good stuff. Let's go into the actual deductions. So you're running a home-based business. So let's talk about one of the big deductions, your home. So let's say you have a home office and your home office is in your home. Where else would it be? And you're operating out of your home. You have this special room that's maybe next door to your bedroom. It's a separate room. That's your office. And you want to go ahead and you can actually deduct a portion of your home being that office as a tax deduction because you run a home-based business. And here's the thing though. Now you have bills in your house and those bills are for the entire house. You don't just pay an electric bill for your home office. You don't just pay a gas bill for your home office. You don't just have your utilities just for that home office. So what you need to do is you need to actually prorate your home utility services based on the portion of your home that you use for your business activities. And what I'm going to go into is how to actually prorate the percentage of your bills so you can actually determine how much money you can deduct because of your home office. So let's talk about the more complicated strategy on how to go about doing this. So let's just say you have a house. You got a home business, you got a house. Doesn't matter if you're renting or if you own the house. No, it doesn't make a difference. So you take the entire square footage of the entire home. You go, you find out, is it 2,000 square feet? Is it 3,000 square feet? Is it 5,000 square feet? Do you live in New York and it's like 80 square feet? I'm just kidding. But you get a number, right? The total square footage of your entire house. You take that number, you put it on a piece of paper. I'm going to take you back to math class right now. I happen to be a math nerd. I competed in math competitions in high school and stuff like that. I get really excited about math, really excited about numbers. You're going to tell on this channel. I talk about a lot of numbers, a lot of facts, a lot of figures. So you take the number, the square footage of your entire house, you put it on a piece of paper. Then what you want to do is you want to go and you want to measure your home office. You want to find out the total square footage of that home office. So what you're going to do is you're going to take the square footage of the home office and you're going to divide it by the square footage of your entire home. And this is going to result in a number which is in decimal format. And I know a lot of you haven't heard that word in a very long time. Decimal format, just say it again for impressionist purposes. Now, you have a decimal number. Now you could take this decimal number and you can multiply it against any of the single utilities you have or your overall utilities, and you're gonna get another number. And this number is the prorated expense for your home office. This tells you exactly how much money is contributed towards that office, because what you did was you essentially took your entire utility bills for your entire house. It's heating all the rooms, electricity's going to all the rooms, and you're taking all that cost and you're trying to figure out how much of this cost is going towards my home office and my home office's alone, because that's all you can deduct. You can't deduct your whole house because your whole house is not your office, but you can only deduct your home office. So when we figure out that math, you'll figure out exactly how much money is contributed towards that home office and how much money you can talk to your CPA about deducting. I may have lost you, and that's okay. Let's go through an example real quick so you can kind of understand what I'm talking about here. So let's just say, for simplicity purposes, and I don't want anyone to be outraged, I'm just going to use a 2,000 square foot house as an example here. I know a lot of you out there have a much bigger house. Some of you may have a smaller house. You know, it doesn't really matter. Like I said before, it doesn't matter, you know, the size of like I said, the amount of money you don't make, it doesn't matter. It's what you keep. Here, it matters what you do in that home office. That's important. Doesn't matter how big it is. So if your home office is, let's say, 200 square feet, and your home as a whole is 2,000 square feet, and I bet you there's probably no house in America that's exactly 2,000 square feet, and there's not a home office that's maybe 200. Maybe there is a home office that's exactly 200 square feet. But so you got 2,000 square feet for your whole house, you got 200 square feet for your home office. What you want to do is you want to take the 2,000 square feet, your whole home, and you want to divide that 2,000 into 200. So you're going to take a calculator, you're going to write 200 divided by 2,000, and what's going to end up happening is you're going to get that decimal number, and you're going to get a number 0.1. Now, I sincerely hope that I did the math correct on that, and if I didn't, I'm going to feel really silly, but I'm not going to cut it out. So 0.1. And now let's say your household electric bill for the entire year was $1,000. You would take that $1,000 and you'd multiply it by 0.1, and you'll be able to determine that you can deduct $100 of that $1,000 electric bill, because that is the amount that's contributed to your home office for the year. And you can go ahead and you could take that same exact approach and you could apply it to the rest of your household expenses to figure out how much of each expense is prorated for your home office. You may say that this is way too complicated. Those calculations went way above my head, or I don't want to grab my electric bill, I don't want to get my gas bill, I don't want to figure out my overall expenses are for the household. I got an easy way for you. I have a method that's even easier for you to take advantage of to calculate how much money you can deduct for your home office. And I'm going to show you that right now. This method is super simple, and we call it the simplified option for home office deduction. And it actually is really easy. You just take a deduction of $5 per square foot of your home up to a maximum of 300 feet. So if you have a 300 square foot office, you just take 300 square feet, you multiply it by $5, you get a deduction of $1,500. It's that simple. And you could only go up to a maximum of 300 square feet. So if your office is at 500 square feet, you can't multiply $5 times 500 because 300 is the maximum. So if you use the simplified option, you can only take your 300 square feet, multiply by $5, the maximum deduction you're gonna get is $1,500. And I would only recommend this approach if you have a smaller office, obviously, because if you have a bigger office, you're not gonna be able to deduct the rest of that extra office, and you might be better off going the expense route and figuring out what your expenses are and multiplying and finding out the prorated amount for each expense is. And I would talk to your CPA and you'd be able to figure out what works better for you. 2 guidelines that you need to hit to allow for a home deduction on your tax return. You either need to meet clients or customers in your home or do administrative work at home, or have your home as the principal place of business. In addition to that, the portion of your home that you use as your home office it needs to be used exclusively for business purposes, which basically means you're not supposed to be using it for other activities if you're claiming all the expenses for your home office as a business expense. If you're claiming 100% of your business expenses for your home office as a business expense, you need to be using it 100% for business. You're not sleeping in it, you're not hanging out in it and playing video games. It's your home office, you're doing business when you're in that room. Here's a list of expenses that people typically deduct for home offices. Obviously, your CPA will better be able to figure it out for you. They include, but they're not limited by rent, homeowners insurance, homeowner association fees, cleaning services, mortgage interest, home insurance, internet, home phone, electricity, gas, and many more. All of these can possibly be claimed as self-employment tax deductions on your tax form. You really want to keep track of what business activities you do in your home office and the duration of time that you engage in those business activities. I always recommend just keeping a journal of what's going on that day, what activities you're doing, how long you spend doing it. Just to have a good journal running, a good log, and some factual evidence in the case that you need it, which we'll go into later. You drive a car, chances are you may use this in your business. And your car expenses can also be deducted. One of the tips I like to give to people is if you put a sign on your car and you advertise your business, your car can really turn into a mobile billboard. So every time you drive, it could become a tax deductible expense. And it's certainly something you want to speak to your CPA about. And what I'm going to talk about now are two ways you can actually go ahead and calculate your mileage deduction for your vehicle. So you can go ahead and add that to your list of deductions. Let's go ahead and break down this self-employment tax calculation. There are two different ways that you can go ahead and you can calculate the amount of your deduction for your vehicle use. The first method is the simple method. You can just take the total amount of business miles that you drive, you multiply it against the cent per mile deduction that the IRS is using for that particular tax year. Every year they tend to change the cent per mile deduction, and you just take that cent per mile deduction, you multiply it by the miles you drive, and you get your deduction total. I'll go ahead and I'll list that in the description box below, the information updated for what the cent per mile deduction is for the particular tax year that we're in. And it's really important to ensure that you're separating your personal miles for non-business activities from your business miles, because personal miles should never be deducted. The other method that you could use is you need to calculate the percentage of your business use of your vehicle for the year. So let's say 20% of your usage of the vehicle is business, 80% is personal. What you would do is you would take the 20%, you convert it to a decimal format, 0.2, you'd simply multiply it against your total expenses for the vehicle for the year, and that would be the amount of the expenses that's allocated towards your vehicle. And those expenses include, but they're not limited to, maintenance, repair, insurance, gas. If you lease a vehicle, you can include your payments as an expense as well. And just take all those expenses, add them up, multiply it by your percentage use of the vehicle for business purposes, and you have the amount allocated for your deduction of your business use of that vehicle. This is super important. If you're not going to take the standard cent per mile deduction that the IRS offers, and you are going to go the more complicated method, you're going to want to keep all the receipts for all your automobile related expenses. And this can ultimately lead to a bigger deduction if you have a lot of expenses in any single calendar year. It is super important that you keep a mileage log which records your mileage for business related activities. If you leave your house on business, your business miles are accumulating from the time you leave your driveway until the time you get back home, if you're based at home and you have a home-based business and your home-based office. And you're gonna have to keep a mileage log. It's important to document how many of your total miles are driven for business purposes every single year. Let's really drill this home. So for example purposes, if you drove 4,500 miles during a calendar year and 1,500 of those miles were business miles, 3,000 miles were personal miles, you would deduct 33.33% of all auto-related expenses that you paid that year, as your business used the vehicle 33.33% of the time. It could seem like a monster task keeping track of all these deductions. Especially difficult is keeping track of your mileage deductions for your business. Let's face it, you drive every single day. That means that in order to maximize your mileage deduction, you're gonna have to literally hand record every single time that you drive, how much you drove, where you drove to, and the purpose of your trip. But there's an easy solution for this. Have you ever heard that there's an app for everything? Well, guess what? There's an app to take care of your mileage bookkeeping needs. I recommend an app called Hurdlr. You can access it on your computer or your phone. Hurdlr automatically records your driving history. It records the date, the time, the number of miles that you drove, along with the starting and ending addresses. It even informs you of your estimated deduction immediately after you complete your drive. Having an app that automatically tracks your business miles and separates it from your personal miles is a very big deal. Most business owners flush thousands of dollars down the toilet every year because they don't track their expenses. The biggest secret that I can reveal to you is that you need to keep an electronic record of your driving miles on your phone. You need to be able to concretely say, I went from here to here, this is the miles I drove, and this is my business purpose for this trip, in order to make a solid deduction for your mileage. This app literally knows everything. It knows when you start driving, it knows when your trip is over. Later on in the day, it'll show you your trip, and you can swipe right on it if it's a business trip. You can swipe left on it if it's a personal trip, and it'll automatically classify it so you can keep track of your mileage deductions. Hurdlr can even pull data from your financial institutions automatically to calculate your overall income, your expenses, and it can even estimate your taxes. Hurdlr generates monthly tax summaries which outline your business income, and it outlines your business expenses, and it lets you know what your estimated tax liability is in real time. This app will help keep you organized and compliant with your mileage logging requirements, and it definitely beats writing it down on paper by a long shot. And for me, it's been super invaluable to a home-based business accounting needs. I couldn't believe how easy it was to set the app up. I mean, you literally just provide an email address and you create a password and you're good to go. I remember the first time that I set up the app, I set it up and I left it on my phone and I went around driving that day. I did a few appointments, I drove from here to there, and at the end of the day, when I turned on my phone and I pulled the notification screen down, I saw there was like a list of trips, and I clicked on it and I saw there was a whole list of trips, and I went ahead and I like swiped right on all the trips that were business related. Every time I went to go like to a restaurant and buy some food, I swiped left because those were, personal, of course. And it was so easy to categorize my business trips, my actual drives and the mileages, because it told me the addresses. It said, you started here and you ended up here. So I knew exactly if I was headed toward a business appointment, and I knew which times I was headed towards like a restaurant to go grab some food. So it's super cool. You just swipe right for a deduction, you swipe left if it's personal. This could greatly lower the amount of money you will owe on your next self-employment tax return. Once again, super important disclaimer. Please speak to a licensed CPA regarding tax matters. This video is for entertainment purposes only. This video is not legal advice. This video is not tax advice. All of these deductions are great, but the most powerful action, the single greatest action that you can take today to reduce your taxable income is smashing that subscribe button. When it comes to education, you could deduct any necessary training which is needed to increase your skill level. If you go to a conference, a seminar, a networking event, in order to maintain or increase the abilities that you have right now pertaining to your business, you can deduct it. This deduction could possibly help you lower your self-employment tax. Now, here's a big one. You can reduce your taxable income by starting a retirement account. Any money that you invest into the retirement account reduces your total taxable income. This depends on what kind of retirement account you're investing into, and you want to check with a licensed CPA to figure it out. Add this one to your list of possible write-offs for your business. It could save you a lot of money on your self-employment tax return. I personally lower my taxable income annually about $19,000 with this single deduction alone. It also has the tremendous benefit of growing my retirement tax-free until I'm ready to retire and go chill on a beach somewhere. There are two retirement accounts that come to mind: the solo 401k and the SEP IRA. The solo 401k is super cool because you have to be a business owner with no employees to use it. And you can literally contribute up to $56,000 a year into this plan tax-free, which is crazy. I mean, that's a whole lot of money that you can put away tax-free. And there's a lot of restrictions on this program. Of course, you want to speak to a certified accountant, you want to speak to a licensed CPA to figure out whether or not you qualify for this. There's restrictions on who can use it and how you can use it. And there's also the SEP IRA, which also might be a good choice for you, depending on what your licensed CPA thinks as well. This can help lower your tax liability on your next self-employment tax filing. Now, what's super cool is when it comes to account fees, regular W-2 employees can't write off banking fees. As a small business owner, you can deduct ATM charges, bank account fees, credit card fees, and late fees. Although I don't recommend putting yourself in a position where you're paying late fees. Yeah, on this channel, we don't do that. That's like throwing money out of the window. That's just not happening. Now with meals, it can get a little tricky. You can typically deduct 50% of meals that aren't considered lavish or extravagant, as long as they serve a business purpose. Let's take a look at how we can claim this write-off for your small business. Super important when it comes to meals, you're gonna wanna keep the receipts. Every receipt, you're gonna wanna keep it. And I recommend keeping these electronically. Take a picture of it. Also record the meal inside that app that I recommended earlier. Description down below. Download it, it's free. Keeps good track of your expenses. Number two, you're gonna wanna record the nature of the business discussion, what took place, what was spoken about. Very briefly, don't need to go into like a paragraph detail. And you definitely wanna write down who was present for the meal. Who was the client that you were meeting with. Make sure you keep these pieces of information in case you might need to present it later. There are significant restrictions to this deduction, so I would consult with a licensed CPA to see how you can apply this deduction to your tax situation. And once again, this video is for entertainment purposes only. This video is not legal advice. This video is not tax advice, and we are not giving financial advice. All right, real quick, trips. Anytime you travel to grow your business, your travel expenses are deductible. Make sure to save your receipts for hotel, airplane, taxis. Is that still a thing? As far as your Lyfts and your Ubers go, make sure you track it in the Hurdlr app. Download the app for free, down below in the description. Now everybody loves a good gift. And as far as gifts go, you'll be able to deduct gifts when you give it out with your business cards, other items promoting your business, and this deduction is normally limited to $25. The one gift that you can give absolutely tax-free is smashing that like button. One of the big changes in law that recently occurred was the Tax Cuts and Jobs Act. And what this essentially means is that since most people, they run their businesses as a sole proprietorship, which essentially means that your income passes through and gets reported on your personal income tax, what the Tax Cut and Jobs Act allows now is a 20% deduction in your taxable income right off the top for doing absolutely nothing but running a business. How wonderful is that? People are scared the IRS will audit them if they claim too many self-employment tax deductions. Now, you always want to be ready for an audit. Now, I hope I don't come on too strong for you, but a lot of people are scared that they may trigger an audit by claiming legitimate tax deductions. And a lot of people think that the IRS just goes around targeting home businesses, and it's not necessarily the case. The IRS tends to target tax returns that look unrealistic. The fact is you need to make sure that your tax deductions are legal, that you report all the income that you make, and that you're using a registered, licensed CPA to handle your tax returns. And if you're doing everything by the book, everything's documented, everything has that paperwork to justify what you actually put down as a deduction, you really have nothing to worry about. And if you do get audited, well, you have the proof to back up your deductions. And the IRS looks at it, no problem. The only person that can let you know if you're eligible to deduct any self-employment tax deductions is a licensed CPA. You really want to keep a business journal. You want to log your home business activities. Make sure your records are detailed. Compile your daily records into a monthly tracking sheet. If you download that app, Hurdlr, down below that I'd mentioned, what that app's going to do is it's going to pull all your expenses from all your credit cards, and you're going to be able to label them as deductions or personal, and it's going to compile automatically a monthly tracking sheet which will show you your deductions on a monthly basis. It'll compare it against your income, and it'll even give you a nice little estimate of how much taxes you owe, so you can come ready and you won't be shocked come tax time about how much money you owe or don't owe. You never know. Question of the day: which self-employment tax deduction in this video have you used before to lower your taxes? Drop your answer down below in the comments section and I will reply to you. I read every single comment, so let's go ahead and have a conversation in the comment section down below. Once again, this video is not tax or financial advice. Please consult with a licensed CPA before attempting to implement anything in this video. This video is for entertainment purposes only. Please read the full disclaimer in the description of the video below. If you made it this far in the video, please consider smashing that subscribe button and turning on that notification bell. That way you'll be notified when I release future videos. I highly recommend joining our mailing list by going to smashingwealth.com. This way you'll be the first to know when I release new videos in the future. I left a link down below in the description to our mailing list. Feel free to follow me on Instagram and Twitter at RealDrRyan. You can also hit the save button to bookmark this video to come back to it later. I'll also be starting a Facebook group. That way we can build a nice little community and talk about ways to save money on taxes, increase wealth, increase cash flow, and all that great stuff. I'll link to it down below. Obliterate that like button if you're feeling generous. Feel free to share this video if you feel it'll be helpful to your fellow business owners. This video was self-employment taxes explained and how to avoid paying taxes legally. My goal was to get you thinking about write-offs for a small business that you could potentially take advantage of. Now go speak to your accountant and let them determine which deductions you can put into action when filing your self-employment tax return. I sincerely hope that you enjoyed these ways to avoid paying taxes legally. This is Dr. Ryan. Until next time, have a smashing day.